So, Amit, no, value is a word we often use but rarely pause to define. Before we go deeper, let me start with a foundational question. When you look at a stock, what tells you that there is a value there? How do you define value?
Thanks, Sonal, for the question, and thanks, Vetri. Happy New Year to everyone. Uh, uh, in terms of how we look at value, it has progressed it has been consistently followed over the last 7, 8 years since this fund was classified as a value fund. We try to buy business or focus on buying business which are trading below the intrinsic value. So we do not rely on the statistical cheap valuation framework to construct our portfolio. We always focus on buying stocks which are trading below intrinsic value. And we also look at stocks where expectations are low at the time of building a position. And we our approach consists also on looking at various quality aspect while incorporating value. We focus on quality on capital allocation of the management, whether any terminal value risk is there because of change in technology or climate change, which can lead to value traps. Uh, Instead of focusing on accounting profit, we focus on cash flow, whether the company is converting sufficient percentage of EBITDA to operating cash flow, whether the capex commitment of the companies are in line with the cash flow generation that it has. To take exposure to cyclical sectors, we focus on where the sector or companies are in terms of the operating and profit cycle of that sector. And most importantly, we look at corporate governance. Many stocks are on a headline basis of value because of genuine reasons of governance issues. So we have a high cutoff in terms of corporate governance. We not only look at historical valuation of sectors to judge where we are in the cycle, we also look at how the underlying business dynamics of that sector or companies may have changed over the period. So we are not completely wedded to history. Recently, you would have also seen that many new sectors, companies driven by digital economies have come to list. And from a value fund point of view, it is very difficult to judge it from a value or a traditional value framework point of view because there is hardly any cash flow that they generate. To invest in such kind of businesses, we focus on the unit economics. We take only small exposure to these kind of sectors, given that valuation are very rich. So our approach or our philosophy of approaching value within the prism of intrinsic value gives us enough flexibility to invest in companies which have various kind of option values which are not discovered by the market. It widens the scope of the investable stocks in our universe because we are not only focused on multiples, and it also reduces portfolio volatility, which also reduces the return divergence with respect to benchmark. We have a uh, we have a set of guardrails which we use while investing in the portfolio, and our primarily valuation guardrail is at a portfolio level, the valuation should be significantly cheaper than the benchmark on a price to book basis. So that is how I would describe how I approach value as a concept in the UTI value fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.